something we've discussed on many, many, many occasions, this concept, this idea of buying and buying and buying and buying for the big commercial trade. Remember, they're not in that long trade exclusively. They're in the long trade and they're selling on these upticks. They're not in one side, they're on both sides. They don't care if the market goes up or down. They're not trading it for a directional bet. They're just trading it for the value divergence to creep back in here. So when the value hits into an area like this, they make an absolute fortune. An absolute fortune. And this is something that we've got to try and recognize is when value goes and you're still stuck at the same price, you know what's going to happen. There's going to be one hell of a reversal trade against your position, which is why we need to get us a scalper trade. We need to get our stops in at break even, and that's why we keep saying, if you get into a phase like this and you overpay, so for example, if you're buying into this phase and you've ended up paying this price, if you end up paying that price, if you end up paying that price, if you end up paying away up here, instead of paying down here, instead of paying in these areas here, you're obviously going to lose a fortune. You're going to lose a fortune, and yet your analysis was 100% right. You just didn't see the fact that the separation became so great in terms of your value that it became a very, very profitable hedge trade instead of an outright position. And then you can see what happens. The trade just gets absolutely annihilated on the other side of the big value. And the hedge traders are all fantastically wealthy out of that trade. And you're scratching your head thinking, what the hell happened? How the hell did I end up not making any money from this bit of business? Having said that, the bond was actually very visible, if you must know. The bond was very visible for the sell trade reversal, but I'll take off the arrows for a second so you can see. I'll take off the arrow, hold on a second. So in terms of the bond outright position, very, very, very visible in this situation. We'd been buying bonds, as you know, all the morning session. But you'll see what happened. Look, you can't hide it. The twos, fives, the fives, tens, does do what it was supposed to be doing. It flattened quite nicely. And then you can see that that extension at the bottom edge ties in with the blue line making a new higher high. The blue line, of course, being the FOB spread, making a higher high. The knob spread starting to diverge against that higher high, suggesting that everything is mispriced. Everything is mispriced. Because remember, it's all based around this is all based around what the knob spread does. Everything is based around what the knob spread does. So when the knob spread is showing strength coming back in here, we know that that FOB spread becomes overpriced. Underpriced, technically, because it's opposite. And we know that we're going to start seeing a steepener coming back in the fives, tens. And that's exactly what you got up here, because the bond had made a new higher high as well, hadn't it? The bond had actually made a higher high at that stage as well. So there was your bond sell trade at that stage. And obviously you've had a very, very nice response to that. And obviously the fives, tens predictor has gone steep. And obviously in line with that 5-10 predictor going steep, you could obviously look at that in relation to what was happening in oil, for example. This is 1 over oil. You'd already seen oil prices starting to bottom out and rally. So I don't suppose anybody was surprised by the bond price reversing back round and squeezing lower. It's pretty much obvious. But this is how you start recognizing this, because that relationship between the FOB knob situation is what we're predicting on the 5s, 10s, isn't it? This idea of that this is the predictor here, this is the actual predictor here, these two lines. When we're predicting these two lines here, we're starting to see what we're needing to see. And if that lines up with what? If that lines up with what? Oil prices, equity prices, risk prices, ABCs. We can obviously start to understand that strength on the knob spread could reverse the bond price. Strength on the purple line is dropping. So when we see the purple line dropping, that's a knob spread steepener. Well, when we understand that that's a knob spread steepener, we know that's probably going to be bullish the market and bearish bonds. This becomes what is called a top edge for the FOB, right? This becomes a top edge for the FOB, which means we're expecting to start seeing a 5-10 steepener. It's predicting a 5-10 steepening. So at that stage right there, when the blue line makes that higher high against a declining knob spread here, that is predicting a 5/10 that's going to start steepening. So we start watching for the 5/10s making lower lows. We start looking for the 5/10s making lower lows. And sure enough, that's exactly what happens. The 5/10s makes a significant lower low and then steepens beautifully off that print. Exactly as you'd have expected it to do. So this is not a difficult chart to understand, but obviously you can see that this is now starting to cause a little bit of a change of heart here. You can see that this is starting to go a little bit too far. Now I don't see this steepening just yet, so I'm patient for this. You know, we can see that there is definitely a slight change of opinions, you know, in this little phase here. And obviously that little change of opinion suggests, of course, that there's going to be a little bit more flattening coming into this phase of on the 5/10s. And so we start watching the 5/10s for that flattener coming back in. And obviously the 5/10s hasn't made a new higher high, so we're not really in the right position just yet to take advantage of this. And obviously if that was going to be the case, then of course what we'd start doing now is we'd start buying some bottom edge bonds against that storyline if that's what was going to happen. Unfortunately, on this occasion at the moment, it's not quite there. It's not quite there. It's pretty easy stuff, guys. You just got to see it. You just got to see it.